All right, today we're diving into something pretty huge. We're looking at how the biggest names in fintech are using blockchain, not just to tweak the financial system, but to completely rebuild it from the ground up. You see, this isn't about small improvements. We're talking about a total revolution.
And this quote right here, it just nails it. We're not talking about patching up the old way of doing things. No, this is about a massive jump forward, completely leapfrogging the old, clunky infrastructure. It's a whole new way of thinking.
So what does that actually look like in the real world? Well, it means we're seeing entirely new kinds of products pop up. I mean, think about Revolut's crypto cards that let you buy a coffee with your digital assets. Or Stripe, which can give a business a stablecoin account that works in over 100 countries. These are things that just were not possible with the old pipes of finance.
Okay, so if fintechs are going to make this giant leap, what are they using to, actually leap? It all comes down to a few key building blocks. Let's break down the new tools that are making all this possible, and we're going to start with one of the most important, the stablecoin.
A stablecoin is pretty much what it says on the tin. It's a type of crypto that's designed to hold its value. How? By pegging its price to something stable we all know, like the good old US dollar. This gets rid of the wild price swings you see with other cryptocurrencies. And that stability, that is the absolute game changer. It's what turns crypto from a volatile asset you trade into actual money you can use. And when you put the new way side by side with the old way, wow, it's like night and day. You go from the traditional world of banking hours, slow processing, and painful fees to a system that literally never sleeps. It's 24/7, it's instant, the fees are way, way lower, and it's global from the get-go. It's just a monumental upgrade. All right, the next key tool in the box is tokenization. This is where the magic really starts. You're basically taking the rights to a real-world asset, let's say a dollar, and turning it into a digital twin, a token that can live and move on a blockchain. This lets companies embed payments right into the chain itself, making them instantaneous and borderless.
And here's the kicker. These tokens are programmable. This goes so far beyond just sending money from A to B. We're talking about building rules and logic directly into the money itself. Imagine a payment that automatically splits itself between 10 different people, or money that starts earning you interest the second it hits your wallet. This creates way more engagement and opens up totally new ways to make money.
So, we've got the tools, stablecoins, tokenization. Now let's talk strategy. Because the most ambitious fintechs out there, they're not happy just using someone else's system. They're making a much bigger move. They're going from being a user of the system to being the owner of the system by building their own blockchains. It's a strategy called verticalization.
And here's the absolute best way to think about it. For a long time, fintechs were like app developers building on Apple's iOS. They were playing in someone else's sandbox. Now, they're trying to build and own the entire operating system themselves. It is a fundamental shift in power.
Let's really hammer this point home. If you're just an app, you have to play by the platform's rules, right? You pay their fees, you depend on them. But when you own the whole platform, well, suddenly you're the one setting the rules. You capture the value from every transaction. You control the entire experience. That is the end game.
So if you're a fintech and you want to do this, how do you get started? There are really three main paths you can take. You can take the easiest route and just deploy your app on an existing blockchain. You can take the middle path and launch what's called a layer 2. Think of that as building your own express lane on a massive secure highway like Ethereum. Or you can go for the whole shebang and build your own layer 1, which is like building that entire highway system from scratch.
And you can see the trade-offs pretty clearly here. The simplest path gets you to market fast, but you have very little control. The hardest path gives you total control, but man, it's slow and expensive. And that's exactly why that middle ground, the layer 2, is becoming such a sweet spot. It offers this really nice balance between having control and getting to market quickly.
But look, picking your technology, that's only half the battle. After that, you've got to make an even bigger, more fundamental choice. Are you going to build a closed, controlled system or an open one?
And the best way to think about this is a walled garden versus an open marketplace. In the walled garden, you, the company, control everything. You decide who gets to build and who doesn't. But in an open marketplace, anyone can show up and build on your platform. And that, well, that can unleash a tidal wave of innovation and creativity that drives network growth like nothing else.
Because that open approach is what unlocks the true superpower of blockchain, something called composability. The best analogy is digital Legos. Every new application someone builds becomes a new Lego brick that any other developer in the world can pick up, snap together with other bricks, and build something totally new, something the original creator never even dreamed of.
So, for instance, think about a company like PayPal. What's one of their greatest strengths? World-class compliance. Now, what if they open that up as a service? Developers from everywhere could build on top of PayPal's compliance layer. Suddenly, PayPal isn't just an app, it's the foundation for hundreds of other apps, and they get to monetize all of that activity. So we've gone through the tech, the strategy, the philosophy. What does it all boil down to? If you're a company, a bank, anyone looking at this space, what are the big takeaways? Let's distill it down.
Really, it comes down to three broad lessons. First, know exactly who you're building for. Creating something for a big financial institution is a completely different universe than building for everyday consumers. Second, security and compliance are not optional extras. They are the absolute price of entry. They're non-negotiable. And third, don't try to go it alone. The smartest players in the space use partnerships to move faster and tap into expertise.
And all of this brings us to the final massive question. As this great leap forward accelerates, what kind of future are we building? Will the next financial system be controlled by a few giants inside their walled gardens? Or will it be a vibrant, open marketplace where anyone can innovate? The answer to that question is going to define our financial world for decades. Thanks for digging into this with us.